Mr. Paul Stone, who is chairman and CEO of the Colonial Metals Group. Paul, welcome.
Thank you.
Welcome to the show.
Oh, I'm so glad to be here.
I'm just going to read some numbers. I want our listeners to hear this, and then you can comment on it. I did some homework last night and did not know this, but over the last 25 years, which is a long period of time, the price of gold has gone up from $265 an ounce to the close yesterday, $2,431. Now, on an annualized basis, that is a 9.3% annual rate of gain for gold. By comparison, the S&P 500 has only gone up 5.7% at an annual rate. So gold has substantially outperformed the stock market in the last 25 years, which is a significant period of time. I might add, parenthetically, silver the same way. You're in the silver business also, if I'm not mistaken. Silver's done the same thing, not quite as much as gold. Silver's gone up 7.2% yearly against 5.7% for the S&P 500 stock market. I would bet you, Paul Stone, that not 1 in 1,000 people knew that gold has done that well. So you're going to tell me why.
Yeah. And first of all, I think, when you look at what the media would spend most of its time covering, it's going to be the more attractive and sensational stories around stocks, bonds, and mutual funds and ETFs and such, right? There's a big, huge media machine that just covers that all day long, and that's what people are mostly going to hear about, and then their attention is mostly focused there. The reason why, and there's a lot of we use time frames normally, right, to say how well is something done in 5 years, 10 years, 15 years, 25 years. But here's why that 25-year look back is essential and a rightly sectioned off period of time. The baby boomers begin retiring in 97. So when you look at the year 2000 to start trying to notice if things have changed.
Present company accepted.
Yes, sir. Right. No. Well, you love what you do. So what would you ever retire from?
I'm still kicking. But please continue.
Right. Yeah. Right. So why? So in the year 2000, and you look at how things have performed, there was a tectonic shift in the fundamentals of our finances. And, I'm not a financial advisor. I'm not a trained economist. This is just a plain spoken man's analysis on how things have been faring over the last many decades, right? Especially since Nixon ended the gold standard. So what is it about the baby boomers retiring? How can I help people? How can I make that land in someone's mind on how massive an impact that was on our finances? So if you had a farm and you had, 1 million workers on this giant farm, and somewhere down the road in 1997, a quarter of your farm retires, and you have to build homes for them, little cottages for them to live on the farm. And you also then have to pay and support them until they move on until the next phase of life, right? So your farm can't produce as much as it used to when you had 1 million workers, because now you only have 750,000 workers. The baby boomers is 60, 70 million people that came into the workforce around the same time in the 50s and 60s, born in the 50s and 60s, entering the workforce in the 70s. They create everything. You're part of this, right? You create everything. You think of everything. You perfect everything. You invest in everything. America is rolling. If you pictured a snake swallowing a football, you've got this population bubble moving through the body of the snake. In 97, it comes out the other end. So when Social Security, this isn't about Social Security, and I'm sorry if this is a little bit of a long message, but it's so important to understand why you choosing the year 2000 is essential for this analysis, because it wakes everyone up to the financial erosion that's been going on behind the scenes.
I just went back. I mean, I didn't want to look at something short term.
Right.
Because I think good investments should have long-term horizons. But 25 years is a significant period.
But here's what's changed. If gold is going up, Larry, you have problems. No one really wants gold or silver. No one really wants that. Really? It's cumbersome. It's physical. Where do I keep it? How do I get out of it? It confuses people. I'm here to help make this an easier understanding for folks. But so if gold is moving higher, It's because you have a financial erosion going on beneath your feet and behind the pretty buildings.
But you like diversification in the portfolio anyway.
Of course.
I mean, that's a sensible principle of finance and investing. I mean, it's true. You know, I happen to think if you, and I've done a lot of work on this down through the years, the last 25 years has not been a good economic period for this country.
No.
I'll give you and you'll see where I'm going on this, but this country grew after World War II for 50 years at a 3.5% growth rate, GDP, real, after inflation. Okay. Right. In the last 25 years, we have grown by a little less than 2. So I would say to you, yes, the baby boomer explanation is interesting.
Let me finish the point, Larry.
I think you've had too much money chasing too few goods.
Well, that's true.
Lousy.
But why?
You've had poor, productivity has slumped.
Yep.
Business investment has slumped. You know, I think we've had a lot of policy mistakes as well.
Of course. Well, and policy mistakes. I mean, the government came up with ideas like prohibition. Duck and cover was how you stayed safe from a nuclear attack during the Cold War. I mean, yeah, the government hasn't really been known for the greatness. The country's known for the greatness. The people, you and I, the common Americans, built this place. So here's why it's essential to understand your workforce sheds 60 million people from peak earnings onto the cost side of your economy's books. When Social Security was created, again, this isn't about Social Security. It's about helping you understand and visualize the numbers and how things changed. 44 workers to a retiree when Social Security was created. Would you like to take a guess how many workers?
It's way
3.
down. Yeah, 3 to 1.
3.
3 to 1.
So when you used to have,
but I want to steer you. I appreciate this, but I want to steer you. Remember, you've got people listening to us who want investment advice. Your basic point is that everybody should have a diversified portfolio, right? And you should have some room for metals, for gold and silver. That's the basic point, which I would say to you is a sound idea. Even if gold were performing the same as stocks, you still want to carve out part of your portfolio.
Right, but when you're looking at the reasons for a thing, we have to look backwards so we can see what supports the reason for it today.
We will see lots of you in the months ahead. We can continue this conversation. All I know, folks, you ought to know, you can chew on this. Gold has outperformed stocks badly in the last 25 years.
And it's due to the money printing. It's due to the financial erosion.